Well, it wasn't the best week, to be honest. I think a lot of people are
Wasn't the
feeling
best
it.
week. Wasn't the best week. We got 6 straight red days in the Nasdaq in a row.
Yeah, it's rough. And for what? For what reason? Jackson Hole? Is that why?
That's where it's always so fun, right? Because like what are we really selling off on? Is it Jackson Hole or is this just price action? Because at the end of the day, right? Like if you think about it as in terms of rate cuts, like what's going on here? Like if you look at the long-term curve on just let's pull up the December 26's SOFR contract, right? You can see like they've been pretty much steady. And what this is telling you is rate expectations since April are pretty stable. Like the floor is not moving. The expectations for more cuts are not accelerating. So I don't think the market, honestly, over a long enough time frame, gives a damn about when we're going to get 25 basis points of easing, right? We're at 430 basis points, right? What's 25 bips going to really do? I think what's going on here is you have a lot of just typical event risk that people are fading into, right? They're trimming risk into it, right? And you're seeing cut expectations fall, as we spoke about in last week's podcast. We were very adamant about fading the rate cut for September so far. Seems like it's working out. Ultimately, I think what's going on here is you have a mix of price action and just event risk where people, quite honestly, I think not just people, us, we really don't know what Powell's going to say tomorrow. The man can say anything, right? He can word anything in any specific way, and we're not going to get an update until the jobs report after what he says, and then after that, the inflation report, and finally the next FOMC. So there's a wide window here where he could say some things, rattle forward guidance a little bit, and we're kind of left in the dark until we get some more, some additional economic prints, and then finally FOMC later next month. So there is the window here of uncertainty, and the market doesn't like that. So
Yeah,
we're
I
seeing some stuff.
I just really don't see him really saying anything new. I think we got the Fed minutes this week, and we've had some Fed speakers come out and pretty much say that inflation is still top priority. Inflation's not down to target, and employment is still fine. So they just kind of reiterated that. We even saw that in the minutes being a big key point that they were looking for. And so, what is Powell really going to say? Like, if he says that, it's already in line with what the market already knows they're looking at. I just don't see him coming out and blindsiding the market with something like bringing like rate hikes on the table or anything
Oh,
like that.
that's yeah, no,
That's really what would screw things up here. But why would he do
absolutely,
that?
yeah.
There's no reason for him to say anything like that unless he's just wants to do something that's going to piss Trump off. But like he's a
Well, yeah,
professional, so I don't think he's going to do that.
I think what you're basically jabbing at there makes sense, right? Like, uh, Powell has to be overly hawkish for him to really change forward guidance significantly. Um, right now, the way the curve's been moving the last couple of days or last week or so is almost like for a mildly dovish statement, something that like odds of a rate cut are still well over 50%. So even if the odds become a coin flip, I think that that's still, it's only 20 percentage points lower from where we are right now. If we look at the Fed Watch tool, we're at 75. So 50% would be about a, coin flip between holding and cutting. And that's not that much further, right? It's not like we're at 90 or 100, but we've already taken some off the table here. And I think that's fair. Like, this is my opinion. So I think last summer the Fed got spooked by the rise in unemployment, specifically the speed at which the unemployment rate started lifting. And you had Sam Rule trigger, which historically has been a great recession indicator. Now, should the Fed have looked beyond the fact that you had employment, right? If we look at the unemployment rate, you had the unemployment rate coming from secularly low levels, like historically low levels, actually, where moving up the way it did is not necessarily the signal of a recession. It's just kind of labor market rebalancing itself into a better state of equilibrium, right? And the Fed got a little, the Fed was spooked by that, and everyone was, right? Mark equities where everything is spooked, and unemployment has since leveled off here. So now we're not really seeing unemployment go anywhere this time. So unemployment's basically at the same rate it was since since it peaked in 2024. We're not really much higher. Yeah, NFP has been pretty much disappointing, especially in the last print. But there's some drivers there that I think the Fed is very open to. And where I'm going with this is the Fed, I think, understands that they may have reacted a little too quickly last summer into the move in unemployment, and I think that they're less likely now in a position where they're going to react again in the same like scared manner, because I think that they really are they do not want to make a policy mistake, because if your policy mistake is cutting rates too quickly and you have to either hold much longer or worst case re-hike, that's not going to be a good situation, especially on Powell's watch here, right? Because Powell's term's coming to an end. How he ends this off is basically the last chapter of his Fed chairman legacy. So, or governor, I should say, yeah, excuse me, not governor, Fed chairman legacy, possibly governor, depending if he wants to stay on or not. Ultimately, this is where his legacy is going to go, and how he presents himself at least as an individual voting member. He obviously cutting rates. It's a hard debate to make that the Fed should ease policy. It doesn't make too much sense, especially with labor being steady, payrolls being weak, but justifiably so due to a huge shift in immigration policy, and unemployment rate, inflation being above trend with the unemployment rate steady like that, right? So it just doesn't make the most sense for the Fed to go overly dovish. Now, the Fed also doesn't want to scare the markets, right? They don't want to just hawkishly scare the markets either, because that would have implications to forward guidance. And the Fed doesn't want to do that. So I think that the Fed ultimately is at a pretty unique juncture here where they don't want to face a policy mistake. There isn't really a signal screaming for interest rate cuts. And the Fed almost is at a point where they can actually hold for another meeting, and depending on what NFP does next month, maybe even longer, without actually destroying the market.
Yeah, I mean, if you just look at it like as bare bones as possible, looking at their two mandates, their median estimate for 2025 was a 4.5 unemployment rate. And we're not even there. And we have 4 months left in the year. We're at 4.2. So like, obviously they need to be ahead of unemployment. They can't just start cutting once it already starts blowing out. But like, we're not even able to break above the highs that we've seen over the last few months.
Yeah, and I think in a way, Powell has pre-addressed this employment issue especially in the last FOMC press release, where he made it very clear that like they're noticing a slowdown in hiring, but they're also noticing a slowdown in firing. So essentially, the labor market's falling in balance, right? Like the labor market's slowing, but it's slowing in an equal state. It's not really deteriorating. It's just finding a new lower equilibrium. And those types of comments are very important when you look at what's going on with these negative revisions. Now, are these negative revisions scary? Yeah, to some degree. When you look at them, they're like, oh wow, they're just massive curveballs here that are being thrown at us from month-old data that's we figured was higher, being revised lower. Could that change? Sure. But I think the ultimate reason why the unemployment rate is not blowing up has to do with the fact that you're seeing these immigration dynamics play out in real time. You're basically taking demand out of the workforce, right? And you're creating a much more tighter and lower running equilibrium in the payrolls environment that you need to sustain growth. And that's what's going on. So you could have lower payrolls and keep up economic growth. And we're kind of seeing that happen. So if we're seeing that, the Fed's definitely seeing that. And that's probably why they have come out recently, especially in the last week, and really reaffirm that their risks right now are with inflation to the upside.
So, with saying that, what do you expect from Jackson Hole, and how do you expect the market to react afterwards?
Well, I think that so far we're going 6 straight red days in a row. Would it be crazy to say we close tomorrow green? I would say probably, unless Powell really dumps the bag on us, right, with whatever says something outlandish. Um, and what I mean outlandish, likely overly hawkish for whatever reason. I don't think the market's priced right now for overly hawkish or overly dovish. When you have uh, odds sitting at 75% chance of a cut, right? You're obviously not overly hawkish, and you have the curve basically still flat to where we have been the last 6-7 months, right? Like you're not really pricing in new cycle lows in Fed policy, so you're not overly dovish either. It's just semantics. So I think that we have 6 red days in a row here in Nasdaq means persistent like unloading in equities. Probably, if I were to say, just for event risk and the way we rebounded off of the NFP print was pretty linear, so a little cool off here. I think that it's going to be hard for Powell to really tank the markets from here, unless again left field hawkish behavior. I'm Obviously we're in risk on and we're long equities, Bitcoin, so we're inherently going to be bullish regardless. Jackson Hole is just another event in the pipeline, but I do have to say that as long as he is not overly hawkish, I think that we rotate higher over the next week in the markets. That's what I'm expecting.
Yeah, I agree with that. I think it's not going to be as crazy as a lot of people say it's going to be. I think he's just going to say what the Fed has been saying, what he's been saying every FOMC leading up to this, and that they're being data dependent. Inflation is still the main focus. I really don't see how there's going to be anything new that's going to blindside the market. And I'm wondering, like, what is Bitcoin thinking? Why is Bitcoin dropping the way it is? Is that also event risk?
Well, I do think that there's a generic. We like to say this all the time. Like the markets trade risk on and risk off every day. We ride the risk on and risk off trends that persist over weeks, months, right? But I do think you've seen over the last 6 days somewhat of a risk off window open up within a risk on regime, right? So you call it like a risk off week within a risk on month, something like of that sort, right? And I think that when you take equities down like this, Bitcoin's going to suffer, right? You take risk down you mark risk down generally, Bitcoin's going to go down. And ultimately, I think as long as we had a lot of fears in the last week about AI being over, AI trade being over. You have names like Palantir getting absolutely whacked, right? I mean, what are we down here? From the peak made last Tuesday, we're down 17%. At one point, we were down over 20 something percent. So I do think that there's these fears that we're seeing, like just a slowdown or an issue with AI overall. You're hearing this on the news headlines every day. They're talking about this constantly on the news channels about AI capex, being null and void, being wasted, no ROI on the capex. And I think that you don't just wait. I don't think that like AI is one of those things where you wake up one day and say, oh, it's not really useful. I think that we'd have to see like a series of events happen that really determine AI to be non-utilizable per se, right, in corporate environments. And I still think based on the current process of what we have in artificial intelligence, like the simple chatbots alone have yet to be fully integrated into the economy. Like companies can do much more with AI than they probably already have done, given, most companies have large board structures. They have to run processes through. They're not going to just run AI right away. So they're still being eaten up into the economy. So to get so bearish, one of the reason I bring up AI is it's been one of the big bearish topics over the last week or so. And it's hard to say that, I don't think that you can make the statement that AI itself is under, call it a letdown, when you have companies like Meta that are down 6-7% off highs, right? And you have companies like Nvidia, like basically people saying the AI capex, the capex is the end for AI. Meanwhile, Nvidia looks like this. Nvidia is at the last nonsense that hit the AI tape was DeepSeek in last year earlier this year in January. And Nvidia went to 120 from 145, and it was over. DeepSeek, Nvidia's cooked, and now we're at 174, talking about AI capex being basically blown to shreds with no ROI. And I think it's one of those other things where it's just people looking for a narrative in an environment where, just today, Anthropic did a huge, like 75% plus 75% up round, right? So their valuation went up 75%. I believe it's like from 100 to 175 billion. That's today. When they're all bear posting AI nonsense on CNBC, right? They're talking it down on Fox, NBC, all the major network channels. AI capex, Meta hiring freeze, firing, et cetera, et cetera. Anthropic comes in with a 75% premium to their last round on a funding round. So it's like, okay, like are we cooked, or are we really just making up narratives here because the market went down 6 days in a row? And I think it's pretty much the market went down 6 days in a row. That's why
Yeah.
we're,
Everyone gets
grasping.
bearish after the
Yeah,
market sells off.
yeah, we're grasping at straws. And then someone replied on X when I said, look, Meta's down 6-7%. How are we this bearish? And they were like, oh, what are you going to wait for it to be down 30% for you to get bearish? And like, no, obviously I would wait for the trend at least to flip before we're bearish. Like, let it get down to 630s before it's over for AI. Like to call it over, like to call it so over for AI and Meta is at prices last seen in July, right? It's kind of hard to make that claim just yet.
Yeah.
I think we need to let it really
It really
it's got to
feels like
rotate some more.
sentiment this week has just been garbage. Like everyone's all of a sudden bearish just after 6 red days.
I have this thought all the time, and I think this past week I've been thinking about this a lot. I think it's really just because like ever since the April lows, the market's been trained, and just based on our DDAP indicator, we really never broke lower mid vamp like at all up until the NFP print, and we recovered it so quickly. So the market's almost been trained in this environment where you rally and you don't really sell off. You just consolidate, and then you rally, and then you consolidate, and then you rally, and then you consolidate. And now we're seeing like just 6 red days in a row. And people are like, well, what's going on? Is this it? Is this the top? Are we rolling over? Why are we trading like this? When in reality, you go back far enough, this is how bull markets trade. They go to upper vamp and then down to lower vamp. And that when you're below mid vamp, you're just in the bull consolidation phase, like bull trend consolidation phase. Price is consolidating. And eventually, like a good example would be like here, right? So like, look, we come down here, we go below mid vamp, sorry, and then we go to lower vamp. And this is when there was some geopolitical headlines. We went down almost to Momo, so it was actually more of a steeper dip. But nonetheless, we come down, we consolidate, and then back above mid vamp, and we're up to new highs. So when you see this type of price action, we're below mid vamp. Well, I'm not too concerned. I mean, this is generic bull market price action.
Yeah. I mean, now Bitcoin on the other hand, that's not looking nearly as good.
No, Bitcoin's not looking as good. Honestly, Bitcoin, I said this earlier in the chat today, Bitcoin has the vibes where like, so just so you guys understand, Bitcoin, by the time this podcast comes out tomorrow morning, Bitcoin can be back up at mid vamp and even higher if it wants to. So Bitcoin just trades with such high volatility when it wants to that you don't really necessarily need to get too concerned, but it does look like we're lingering near these August lows where equities, like if you look at equities, we're not. Equities are not near the early August lows, but Bitcoin is. So if we take a look at Bitcoin, I think there is some general risk here that Bitcoin can take out the early monthly lows and probably put a little selling dip here if it wants, possibly even down to Momo. Now, that wouldn't be comfortable, but that if we can see Momo, that would be a dip buy and a half, in my opinion, if that happens. That's where you kind of like push the odds in your favor, because at that point, equities are probably much lower, right? Bitcoin's probably not going to nuke to lower to Momo from here to 105s without taking equities with it. If that were to happen, that's you have much better risk to reward perspective, given equities would be down, growth would probably be showing signs of rolling over, you'd be catching like a reacceleration trend in the market. Odds being growth bottoming and ripping from there is what your bet would be. But we're not just seeing that yet, but it is something that like starts, as price builds at levels, I start thinking like as we started building up here, it looked good. We had a wick and then a sell off. So that's obviously not the best sign. Below mid vamp, again, consolidating. So Bitcoin does look a little worse than equities, but it also can recover so much faster. So for me to sit here and get so bearish on it and be I'm along it. So I'm not selling it no matter what I really say here. We're going to stay along bullish trend in the right regime. But you have to be okay with there being some volatility. Just it looks like it could try and pull some tricks here. So if you're long it, just make sure you're sized accordingly, because if we drop 6% from here and you get liquidated and we bounce off Momo and then we go to all-time highs, it's going to be jokes on you if that happens, right? So you need to just understand that there's a lot of leverage in crypto. That's why when liquidation cascades come, they come hard because people are just getting railed out of their positions left and right. So just make sure you're positioned accordingly to handle, that surprise dip if we get it to 105s. Maybe it's 2 days long and then we reverse. Maybe we don't even get there. Maybe by this time tomorrow, Bitcoin's at 118, right? Ripping through Jackson Hole. Like we'd have to see, but just be prepared with your portfolio if you're long Bitcoin with leverage to not be oversized and get blown out on typical just bull trend pullbacks. That's what that is. A bull trend pullback is when you're in a bullish trend and you go all the way down to Momo. That's what a bull trend pullback is. You can go all the way down. Typically, we just see lower vamp, but if Momo does come, you have to be ready to not get blown out in the process. Thank you guys so much for listening. If you have any questions, feel free to reach out to us on X at The Market Radar or go to our website at market-radar.com.